Good afternoon, everybody. My name's Clive Posselt, and a very warm welcome both to our audience and to our panelists for our discussion this afternoon. The plan is 35 minutes or thereabouts of discussion and debate, followed by Q&A. If I could ask the audience to please use the Q&A functionality in the webinar GUI to send in your questions, and I can then put them forward to the panel. We'll also be having a number of polls during the session. Hopefully that will give us a better idea of the backgrounds of the audience members and also their relative understanding or experience with the topic, so we can, address those our discussion topics and points accordingly. Hopefully, as you know, this afternoon we're going to be discussing data as a service. We have a fabulous panel with us this afternoon, all of who contributed to the recently published Financial Markets Insights report entitled Remote Working, very, very salient at the moment, reveals critical importance of data as a service. So without further ado, I'd love to introduce the panel. And first off, can I introduce Julian Dugat? Julian, gives a wave, so everybody knows who you are. Thank you very much indeed. Julian is fixed income, client execution platforms and digital sales with NatWest Markets. Next up, we have Patrick Flannery. Can you say hi, Patrick? Thank you very much indeed. Patrick's the co-founder and chief executive of Maystreet. We then have Mark Wolfenden. Thanks for giving us a wave, Mark. How are you doing? Mark is managing director at Euromoney TRADEDATA. We've got John McPherson. Welcome, John. John is the deputy chair of the advisory panel at Engine, the Investment Association's accelerator. And last but not least, we have Matthew Chung. Hi, Matt. How's it going?
Hello.
And Matt's Chief Executive Officer of ipushpull. So welcome all. And to kick off, what I'd like to do is start up with our first poll of the day. And hopefully this will give us a better idea of hopefully whether the audience have a decent idea of the topic. So first question going up now. And it's, have you heard of data as a service? Yes, no, or not sure. Answers coming in rapidly. Need some music here, a bit like Who Wants to Be a Millionaire, probably. But yeah, we're getting close now. So there we go. 85% of the audience have heard of data as a service. So that is pretty good news for us and the panelists. No was 12% and 3% weren't sure. So I'll just end that poll for now. And given people have heard of what this is, I'd love, Matt, if you could kick us off just from your experience and your view. What is data as a service, and what are the salient points we should be thinking about?
Yeah, sure. Thanks, Clive. Thanks everybody for joining us today. So data as a service, from our perspective, we see it as the ability to seamlessly connect your data to anyone else who wants it in whatever application they want. So you can connect your data, which could be sitting in a database and a platform, even in a spreadsheet. You can then share that with your clients, your customers, or their colleagues into applications they're already using, like an Excel spreadsheet, a chat platform, a chat bot, an internal platform via an API as well. And that data can be live, it can be streaming, or it can be on demand. And with that, because we're working in capital markets, we need all of the enterprise security, control, and audit on it. Historically, data sharing in capital markets has been pretty complex. It's been very manual. You see a lot of emails, file sharing, copy paste, and so on. And that's very then hard to streamline and automate and audit, or you use expensive developers to connect all this data together. And none of it being out of the box. So why is it pertinent now? Well, the financial markets obviously have seen a big change in working conditions, people working from home because of COVID and so on. And that's really accelerated cloud adoption and digital transformation projects across the markets. There's really an interesting piece in the FT this week, I don't know if anyone read it, about how big banks are now adopting the cloud. We saw Microsoft actually in the last quarter saying that their CEO said they've seen 2 years worth of digital transformation in the last 2 months. Microsoft are actually reporting tonight, so keep an eye out after the bell to see what their comments are this time around.
That'd be really interesting.
Yeah, no, definitely.
I think 2 years is probably an understatement for some companies. In the
we'll see how those metrics get spread out when they comment on it later. But what's happening now, was inconceivable at the start of the year. The people moving to the cloud, adopting all these technologies. So what does this mean for data as a service? What it means embracing data as a service means you're no longer confined to internal workflows. You can utilize the cloud to then use the cloud as an enabling technology to then share data to external clients and customers and teams, to trigger workflows and so on. And using data as a service means you can do it in any application and it's all plug and play. Again, using the cloud means it's incredibly scalable, it's significantly cheaper than you trying to build it yourself, and there's a fast time to market. So I think with the panel we've got here today, they're going to probably talk about some of the scaling and how you can use that with the cloud, decisions, how kind of buying things in instead of building it and how those decisions were made, and then really why data as a service needs to be part of a digital innovation strategy if that's what your organization is now looking at.
Brilliant, thanks Matt. That's a really good overview, and hopefully that sets the scene well to the topic we're going to be discussing this afternoon. So moving on, I've got a couple more polling questions before we get out to the rest of the panelists. So first off, I'll launch this one. And what has driven your firm's digital transformation, given what Matt was saying about the change 2 years and 2 months? Has it been the CEO, the CTO, the CIO, COVID-19 or other?
My money's on COVID.
Interesting, there's 3 are neck and neck at the moment. And COVID's one of them. Any more able to just click their polling numbers? I think we're going to call it there. So top of the pops, actual fact, COVID and other. CEO 13%, CTO 26%, CIO 11%, and in the 30s each, COVID and other. So as you said, COVID obviously has had a strong effect on people's digital transformation. So the next question I was going to quickly ask, and this will help the panel to help sort of direct some of their responses, I think. And I'm just going to launch this now. So is your firm buy side, sell side, technology vendor or other, please? Funny enough, this question is actually being answered much more rapidly than the previous one. And if we just end the poll there, so we have 39% technology vendors, 17% sell side, 15% buy side, and about 35% other. So that hopefully gives the panel a bit more of an idea as to the sort of audience we're talking to this afternoon. So Matt, thank you very much indeed for your fantastic overview. What I'd like to do is move on here and bring John in here. Both from your experience at BMLL, but also working with your buy-side members at the Investment Association. Can you give us an idea where data as a service is being used within the markets today and some of the advantages that it's offering to people?
Yes, Clive, thank you. So I'll just put in a little bit of context. My background actually goes before the Investment Association Engine program, which I'm now involved with and have been for the last 2 years. Before that, I was CEO of BMLL Technologies, which is a fintech startup that has been scaling up in the UK and globally. And before that, I had a career on the sell side in the investment banks, primarily with Goldman Sachs and JP Morgan. So I've been through the evolution, if you like, of firms very much building first and buying last. Up until my departure from Goldman Sachs back in 2013, it was unthinkable that they would buy in technology. They would build everything themselves, bespokely. Having caught up with some of the senior members of those teams in the last year or two, now that's very much reversed. Now they're very much a buy first and build last company, which I think is prevalent amongst all the major financial institutions that I've come across. So that ship has sailed, if you like. As it relates,
and that was very similar to yours there, John. Definitely been a transformation.
Yeah, no, and it's very noticeable. You know, people want to work with fintech firms. Once you have a problem to solve and you've identified it, you're trying to identify a solution. Now, with data as a service, it's interesting. My experience from the last couple of years has primarily been through the buy side of the business as opposed to the sell side historically, and getting used to and understanding the type of problems that those institutions have. Data as a service for them, they look at very much as to be a cost-efficient, responsive service that lets them focus on selling their products rather than sourcing, managing, and activating the data. I think specifically amongst the asset management community, the primary benefit they look for is around the automation and streamlining of pre-trade negotiation workflows, which is where ipushpull very much come into the picture. But it can help them across lots of different things if they'll allow it. That can range from client relationship management through the market data piece, risk management, post-trade processing, trading surveillance, and even research. So there's a whole bundle of things, but the one primary entry point.
John, I was going to say, John, you say there if they allow it. Do you feel there's an appetite out with the trading desk to embrace this sort of technology yet?
Very much so. I mean, specifically again from the buy side, which is where I'm coming from today. The firms that have that appetite are very keen to adopt and move forward quite quickly. But we're seeing an interest from all the firms in learning more before taking maybe that next step.
Yeah. No, that's very interesting. And can you sort of give us an idea of maybe some of the advantages, specific advantages they're saying, other than just at the trading desk? You gave examples, but are there any other sort of clear examples in sort of post-trade or reference data that are particularly jumping out to your members at the moment?
Regulatory and risk management are basically challenging firms to capture, store, and analyze the data over many years, many departments, and many regions at far greater granularity than ever before. And I think that's probably the one that I've seen the most interest in of recently, but there are multiple examples.
That's brilliant. Well, thank you very much indeed for that. That's a good bit of background on the buy side. Patrick, can I come to you next? Obviously, there's an appetite for this, both on the buy side, sell side, and also for data vendors. But as a technologist, from your perspective, what are the key challenges that data-rich firms really experience when looking into offering data as a service to their customers? And how can they overcome these?
So we think, we break the problem down into 5 different areas. So collect, store, transform, maintain, and deliver data. So for whatever sort of data that you're working with, if you think about digital transformation, a lot of automating processes is getting access to the data and then providing computer code software with a place to run it, right? So getting the actual inputs to automate the business process is really a foundational challenge. Actually getting the data. So when you think about collect the data, in our thinking, there's both a business challenge, which can involve licensing rights, it can involve physical access, security, but also a technology problem. How do you actually hoover up all of the different bytes? How do you ingest them? So once you've collected the data, you have to store the data. And increasingly, the more data that's produced by markets, but also internal systems that are automated, there's a reflexivity of sorts. The more data you produce, the more data you have to work with, the more things that become automated, and the more data that's there. Well, for us as a company, we have about 12 petabytes of data. It's growing quite quickly, linearly across all sorts of asset classes. If you were to take that, you go to the AWS calculator, you can Google.
It's going to come out pretty expensive.
It's definitely hundreds of thousands of dollars per month per region. Now, most firms have a hard time storing all the data because they're not really quite sure what to do with it, or they don't have the tools. So this whole process of, once you have the data, actually having it in a place, and oftentimes, finance firms are global, so having different copies of the data in different geographies that may have different governance is certainly an issue. So that those storage costs can multiply, and they're only getting larger. It's only, you're only storing more data. So once you have all this data, it's a pretty unformed data lake or data ocean, and so you have the process of maintaining it, organizing it, and accessing it, right? So oftentimes there'll be an ocean of data, and you're really trying to pull out the relevant portion of it. That's a big challenge, right? So having that large collection of data, and once you've extracted the relevant portion of it, you need to put it and deliver it to some set of workflows, which oftentimes requires downstream workflow integration. Maybe that's databases, maybe that's tools like ipushpull are excellent for that, because they become a conduit to integrating with a whole host of downstream applications, right? And I think that downstream integration, you're saying data as a service, but it's kind of integration as a service in a lot of ways. You're making data useful. So the question was, what do we see the challenges? There's a lot of challenges, and some of them are technical, but many of them, are really, frankly, because of the structure of the business.
That's really interesting. One thing I was going to ask you about is this change in the buy versus build mentality. Is that something you're seeing?
Oh, for sure. I think we see post 2008 a good number of firms, particularly ones that weren't necessarily digital leaders, become way more cost sensitive.
Yeah.
I think there's certainly the potential to accelerate that even further with whatever happens post-COVID. Bank earnings to date, we saw this last week, have been good from trading revenues.
Yeah.
But that's not to say that the bank as a whole is not. Sell-side institutions are going to be a lot more cost-focused, but also buy-side institutions. If we don't know what the market's going to do, whether it goes up or down, but if your business model is charging as a percentage of assets and you have fewer assets, you're about to become a lot more cost-sensitive.
No, that makes complete sense. Actually leads us on very nicely to our next poll for the audience. So I'll launch this one, and it's absolutely on that topic. So if you would implement data as a service, would you build, buy, or are you currently undecided?
Just as a purveyor of these things, I hope the answer is buy. But
yeah. Yeah, buy at the moment is definitely out in the lead. And we'll give it a few more seconds just to wait till there's a few more answers come in. But if I just close it out there, we've got buy 58%, build 20%, undecided 23%. My guess of the undecided, if they think about it, they're probably going to go to the buy route, but interesting, still 20% on the build perspective. But
some of the greatest customers are the ones that try to build and then buy. So giving it a go yourself will actually maybe provide the humility to create a great customer.
Yeah, hopefully they don't actually use up their complete budget during the build phase and leave themselves exposed on that score. But I can see that. So if I can move on to you, Julian, here. Obviously, you guys over at NatWest have embraced data as a service. Can you talk us through how you are actually using data as a service? Obviously, very much part of your fixed income business now, and how you're optimizing AX distribution using this new technology.
Yeah, sure. So maybe before I start, for those who don't know, an AX is an indication that we send to our clients to just to indicate that we're interested in buying or selling a certain asset. And this asset can be a bond, an asset swap, an interest rate swap, so anything else really. So for instance, we would be sending an AX to tell our clients we're interested in buying a certain quantity of a certain bond at a certain price. And when it comes to distributing these axes, it's very important that the data is timely, so always up to date, that it is actionable, that it's relevant to each and every client, and that client can access the data easily. So in order to solve all of this, we've partnered with ipushpull, and I'm sure Matt can give you more details about his platform. But in terms of how we're using ipushpull, we basically stream live data to the ipushpull controlled cloud, and then we let our client pull this data in real time into like Excel, Symfony, and various other endpoints. But if I go back to access distribution, so as I said, this data needs to be timely and up to date. The worst thing that could happen with axes is getting a call from a client on a stale axe. So maybe we send an axe this morning saying, we're interested in selling 10 million of this particular bond. Client calls us later to trade on that, and we don't have the inventory. So that's really bad experience for the client, and really something we try to avoid. So how we do this is we avoid the manual ways of communicating these axes. So whether it's on the phone or emails or unconnected spreadsheets, and instead we stream our data to clients directly. So everything that the client can see and access to ipushpull is live. So we know it's in sync with our internal view of the data. The second aspect was about this axe data being relevant to clients. That's especially true for bonds. So each dealers will be sending and pushing tens of thousands of axe messages every day. So being able to target specific clients with axes that we know they're interested in is very differentiating. And how we've implemented this in NatWest Markets is we've got an axe monitor that our salespeople use to monitor all our live axes, and we've integrated this with ipushpull directly. So for instance, if you got a client calling us and saying they're interested in buying some bonds in the auto sector, the salesperson can go into their monitor, they will filter their axes for the auto sector, they will select the axes they want to share, and by clicking just a single button, they will start streaming these axes to client in ipushpull. And clients will be able to then get this in real time straight into their desktop, which brings me to the next aspect of it, which is accessibility of the data. It's very important for clients to be able to consume our data where they want it and how they want to do it. And for most users in front office, that is on the desktop in Excel, and more actually in the Symfony chat platform. And what we really like with ipushpull is the fact that they do have all these endpoints. So we have an Excel add-in that we publish with ipushpull, which we make available to our clients for free. That enables them to just load our axe data in real time, all live into their spreadsheets. But obviously, they can also do this in Symfony, on the ipushpull web app or mobile app. And all of these endpoints have a very, very low barrier to entry. So clients don't need to install anything on their desktop for this to work, which makes it really quick for us to start pushing this. And the last point, if I may, is we're really trying to get these axes to be actionable. So it's very important that client can actually trace on these axes in a very efficient fashion. So we've got an execution bot on Symfony called Scout, and Scout enables client to request live prices and to do execution workflow directly on Symfony. So what we've done is we've integrated Scout with ipushpull. So what this means is that clients can seamlessly go from an axe, which we've distributed on Symfony, into an execution workflow with Scout. So they can, in effect, trade on our axes in Symfony. And that's probably quite a comprehensive answer already.
I got a question for you, Julian.
Go for it.
Why did you not choose to build this yourself?
So there's probably a few reasons. The main one is speed to market. So being able to buy a product off the shelf like ipushpull that needs very little integration to work was quite key for us. So we once you bought it, you don't need to spend ages customizing the product and integrating it with your own data feed and all of this, you can get going really quickly. So you can do Excel to Excel very quickly. So we started by doing that, and then we gradually adapted the product to our needs. So as I said, we started integrating our Axe monitor to ipushpull. We started doing the integration on Symfony with Scout or Execution Bot, but that happened gradually. So you can really get some use out of ipushpull out of the box, which was quite important for us, really.
That's great. Mark, can I pull you in at this point? You've been pretty quiet so far. I'd love to give you, from your background, what are some of the commercial benefits to data vendors or others from data as a service, and how can it help facilitate potentially more flexible business models?
Sure, thanks, Clive. There are a number of commercial benefits for both the suppliers of data and the end user, but most obviously only paying for what you need is a clear benefit for an end user. I think broadly speaking today, many clients now only really want to purchase data that they have an active use for, so typically based on open positions that are being handled for clients to right-size transaction activity and save costs, although the degree of clarity on budgets related to on-demand consumption are two conflicting things in general. But if you view the economic model of supply and demand and the price volume curve of goods and services, the more granular the price volume changes are, the smoother the curve you get, and conversely with larger price volume changes with clunkier type graduations, the more of a sawtooth curve that becomes. And I would suggest that many of the current market data contracts are designed for bulk data delivery for large investment firms who serve global products and markets with a clientele to match that. So data as a service offerings may provide the opportunity for small to medium firms to access same or similar high quality data sets that they're currently unable to due to prohibitive costs. And as such, data as a service will allow such firms to match and scale operational costs more closely with their trading activity. This is, however, quite a big transition from where we are today with systems and contracts. More flexible business models can include placing data on demand in the trade lifecycle, from pre-trade risk validation with dynamic checking of, say, contract size and tick data, for example, through to post-trade regulatory compliance, such as pre-submission data field checks on transaction reports, and portfolio management, such as dynamic symbol lookup to send repricing requests to pricing engines. Data on demand can streamline trading processes, such as resolving trade breaks, where currently well over 85% of trades are automatically processed, with a further approximately 10% or so resolved using bots these days, leaving the last few percent of trade breaks that need actual human intervention. And these residual trade breaks can be corrected using community networks, for example, such as Bloomberg, Messenger, Icon, Teams, Slack, and Symfony, to name a few, where users can message co-workers within their firm or externally to counterparties, all within a secure environment, in a pinpoint, focused, and data-driven workflow at a very granular level to resolve the trade break. We should, however, recognize that mass data publishing is still very effective by large file transfers. And I believe I'm right in saying that most of the world's payment processes are still done by large mainframes, and which represent less than 10% of global payment costs. So there are still great efficiencies in the bulk transfer of data, and I don't see that really reducing to any great extent in the foreseeable future. But what I do see is the combination of bulk file delivery being complemented with top-offer data sets that aren't regularly used. And so basically, you only pay for what you use outside of that bulk coverage required by large firms, for example. The move to data on demand via APIs and other digital channels, such as Excel add-ins, bots, and community messaging systems that I've just mentioned, play to the fact that small data can be delivered to the point of absolute use on demand and in a live environment, and so is complementary in the main to existing trading systems. However, I don't see a great shift away from bulk data sets anytime soon because of the legacy systems that are still in place that have to process them. But I do see a lot more investment into the use of real-time reference data on demand as part of the trade lifecycle.
Brilliant. Very, very interesting insights there, Mark. Thank you very much indeed. Just for the audience, we've got a number of bits of Q&A coming in, so please keep those coming, and we'll move off to some Q&A in a little while. Brings us round to our last poll of the day before I bring Matt into the conversation. So I'm just going to launch this one for you now. And it's what end user app would you use to consume data as a service? Excel, Symphony app, Symphony bot, API or other. Just get an idea of what the demand is for the different types of consumer interfaces.
Clive, can I say that while people are polling, these apps are actually complementary to existing trading systems, so they're actually additive. And they can provide a much needed injection of efficiency gains within legacy systems as they still stand.
Yeah, I can well imagine, definitely. So if we look at the responses to the poll there, we've got the winner API 63%. Next favourite, interestingly, Excel, the good old favourite that's been around for years. And you can't get them out of an investment bank. It's going to be difficult taking Excel out, kicking and screaming. Then Symphony app, Symphony bot, and other. So thank you very much indeed to the audience for the insights there. Matt, if I can bring you in here, obviously we've talked about how data is being service being used, both on the buy side and by the likes of NatWest. Some of the difficulties that Patrick was talking about in picking up data service as a new service for your business, and some of the business and business implications from Mark. But from your perspective, can you give us an idea of how ipushpull particularly helps clients to adopt data as a service? How that is a nice, quick, easy win, and also can you share some of your success stories with us, please?
Yeah, sure. I'm really glad for the results of that poll. People wanting to hook up to APIs is a great thing. It is the easiest, most seamless way to do it. And it's good that that type of technology is being adopted a lot more. Excel is always, we call Excel probably our gateway drug, because, if you walk around a trading floor, Excel is the thing that you see probably as much or maybe more than Bloomberg. Yeah. It is everywhere. It is ubiquitous, and as much as people want to try and move away from it, big firms, EUC policies in big firms are to move away from these end user computing applications, but it's still very prevalent, and probably more so on the buy side as well, because they don't have those same EUC policies. How does ipushpull how do you address some of these problems, and how do we help? We work with firms across the entire trade life cycle. So from the front office, who want to be able to embrace the ability to easily share real-time data to clients, across the desk, or to the back office, who might want it live and on demand. And just to clarify kind of the nuances in terminology, I talk about live, talk about streaming, and on demand, and they're all slightly different. By live, I mean update. You can update data in one application, and then you see it updating somewhere else at the same time. Like you might have used something like Google Sheets before, and you get that type of functionality, whether it is live. By streaming, I mean the typical type of streaming data you'll see in the markets, so ticking prices and quotes and so on. Where typically on sales and trading or an execution desk on the buy side, you'll need that type of streaming data. And then you've got on demand, which is what we talk about with Euromoney and Maystreet, where they're doing the heavy lifting in getting all this data together, and petabytes of data and millions of rows in a database type data they're dealing with reference data and market data. But then those downstream applications, you can use something like a bot that's sitting in a Slack app, in a Slack chat, or Teams or Symphony, and that bot can just query this big heavy database that's sitting in the background. So there's different types of ways you can use the data and consume it. In terms of success stories, where customers already have the data and have the platform, they might lack the distribution, to end user applications. Our customers are using us for kind of the either the first mile or the last mile of connectivity, depending on how you look at it. The first mile being data that might be unstructured or sitting in an application or system that doesn't normally have any external connectivity. And then by connecting that into our platform, that data can be securely pushed into the cloud, be made available to other people. By the last mile, and it's probably something kind of picking up on what Patrick was saying about these downstream applications, it means getting data into applications that people are using and that are already using. So you don't need to install anything new. That data can be coming directly into your spreadsheet, directly into your chat, directly into your internal blotter or platform that you might be using. So that kind of last mile of distribution. That poll was interesting, like I said. I mean, out of our 20 or so integrations that we have, I would say 90% of users are probably pushing data into ipushpull, either through an API, a database, or Excel, and then distributing that in real time into Excel, API, and a Symphony. And in Symphony, either as an app or as a chatbot. There's kind of different things you can do inside that environment. Yeah. In regards to success stories, I mean, really glad and happy to have this amazing panel on board. And there's a number of projects we've kind of spoken about here, and all of them are utilizing the cloud. Importantly, nothing is on-prem with everyone on this panel. Everything is utilizing the cloud. And I really think that digitization of these type of use cases is going to become more commonplace. People are going to question, why are they using either expensive developers to connect things together, or why are we doing this manual process where someone manually and literally physically is having to copy and paste something from one application to another, send it over via voice or chat. Someone else on the other side also has to do something similar. Lots of manual processes, which is emails, spreadsheets, copy paste. By moving to this new way of data sharing, it kind of unlocks this technical efficiency and ultimately automation as well. So then humans can be spent looking at higher value tasks. Already seeing a lot of that in the electronification of the OTC markets. Yeah. You've seen trade webs and market access and companies like that electronify these historically manual type of workflows. But then why have it stop at front office electronification? Why can't that type of workflow and data-driven workflow be start organically growing across the organization? So I think we see live data sharing becoming ubiquitous, both internally, connecting onto all these applications, and then externally to your clients, to your customers, and also connecting into technology vendors who also can take what we've built and utilize it themselves into their own networks as well. It's definitely a network effect going on, and we're not at the tipping point yet, but we're getting near that, and the cloud is just ramping that up. So it's a very exciting time to be looking at data as a service.
Matthew, can I ask you a question?
Yeah.
Would you say the two biggest hurdles for adoption are around infrastructure and operational hurdles, I suppose?
Yeah, 100%. Typically we'll go into when we're selling into business, into a desk, and they'll identify problems, and we're a solution for it. And we will go into the bank. This is more for banks as well, probably less so as the larger the institution is. Obviously things are going to be slower. We run into even though there's been adoption of cloud in the industry, then that's great. But then what happens is, we've had one company say, "Oh, we use Azure and you're on AWS. Can you rebuild your platform in Azure?" It's like, "Oh, yes, we can, but it's going to cost you more money because we're in AWS." But it raises interesting questions like, okay, well, can you have a cross connect between AWS and Azure? Or there's another bank we're dealing with who they do use AWS. However, they want us to deploy in their environments, which means we need to change things how we're set up. So I think it's the InfoSec barriers are changing. I think they're becoming more adaptive and more agile, kind of the InfoSec departments in banks. And I think that's been led by where you have like innovation departments, or when there's been a top-down strategic decision to say, right, we want to start using this technology, let's try and lower the hurdles a little bit, because if you're dealing with startup organizations, you're not dealing with IBM or SAP when you're doing some big deployment. They need to be able to do it quick and fast, and that's what makes a startup, and that's a competitive advantage for a startup, to be able to move quick. If you kind of throttle that down, so things are slower, then you're losing some of the benefits there as well. And lastly, I think around deployments, if you're deploying on-premise or on someone else's cloud and you can't have access to it, it just means that you can't have that really quick, agile, iterative approach when you're building products. And maybe we're helping to build a GUI for someone, and they want, I want this button here, and I want to click this and be able to do that. Oh, you're gonna have to wait until next month when the firewalls open up and we give you access. They're a little bit like that. I think some old legacy type of processes, and then what the cloud is kind of unlocking. But it's it's a time of change. I mean, we've seen banks and buy side change the way they view these things, even in the last 12 months. People's perspectives have changed quite significantly. I don't know, like Mark, Patrick, Julian, have you got any comments on that as well?
I would like to follow on to John's really. Do you think the ipushpull technology can assist in big firms moving or breaking down their legacy systems almost brick by brick to eventually change the whole of their infrastructure? Do you see a role for that?
Yes, I think we can move, because we integrate into legacy technology as well as cloud technologies. It's a way that exactly brick by brick you can start filtering some data through, and then over time we kind of go in on maybe on a tactical use case, and you end up becoming a strategic part of the infrastructure over time. So yeah.
Mm-hmm. A few questions coming in from the audience here. If I could just put this one to you, Julian, should be fairly quick. Does your client know that it is an axed quote when accessing the data stream from you? I'm assuming the answer to that is yes.
It is yes. That's a good point, actually. So the data basically we take through ipushpull is structured as it is. So we only push access today, but we are looking at other data type. So selling things like prices, and started looking into workflow as well. But for now, yeah, absolutely, yeah. And it is very clear that our streams are access.
Brilliant. Next one, I think probably for you, Patrick. Person here saying data as a service is not new. It's been around for years, especially by outsourcing middle and back office or pure play data as a service like Tech Mahindra. Former prevalent, however, the outsource managers have not bought into the pure play model. Do you have any insights as to why?
Well, I think yeah. I mean, one of the things that was cited in there was market data licensing can definitely play into it. The sophistication of different sorts of firms. I think there's kind of where you sit within the hierarchy, and kind of a firm's own adoption kind of describes a little bit of how they relate to their customers. So certain sell-side firms have a little bit more sophistication than a number of buy-side firms. So I think you will see it, and the problems are solvable, but it's levels of understanding for a market participant and their counterparties.
Excellent. Next one, if I could put this to a mixture of you, Matt, and Patrick. Basically, the tools offered by you to your customers, are they actually affordable for smaller institutions rather than just the large buy and sell sides? So how easy is it for the uptake for some of maybe John's smaller members of the investment association to start using data as a service?
Yeah, I'll grab that first, Patrick, if you want.
Sure.
Yeah, I mean, again, going back to keep banging on about the cloud, but because you now have the cloud, the cost barriers, there's a lot more flexibility around that now, where previously, even us as a company, 3-4 years ago, we were doing on-premise deployments, which then becomes has a lot of support, maintenance, and overhead, and so on. So that's helped in reducing cost for end customers who want to use our service. And we have, talking about kind of buy sides and sell sides and big IDBs and so on. We also have kind of a raft of hedge funds and prop traders that use our service. We've got quite a few prop trading groups that use us for consolidating real-time risk and then putting notifications on certain P&L levels that are going into Slack and going into as an SMS message as well. So we're dealing with plenty of firms that are on the smaller side. Patrick, have you got anything to add to that?
Yeah, we deal with tiny firms up to government agencies, banks, big and small firms alike. I think the cloud definitely does have the potential to offer sophisticated solutions. Although we're not entirely there, it's definitely moving in that direction of on demand. Right. So, if you're accessing a small portion of the ocean of data, you have the ability to pay for a smaller portion of it. So I think that has a lot of potential, and when done well, looks a lot more like the highly successful large technology companies that you're able to consume, huge amounts of value, at piecemeal, kind of pay per drink sort of model. So I think that's from a question from someone I know who we've met before. So
it sounds like you've heard that one before. Question here for Julian. Are you seeing more business shift to OTC and away from trading venues, given the ability for you to deliver data as you are doing with those axes? And does that really help you, take more market share on the book?
So, you have, in terms of axes, really, you can split it between bonds, which are very, very electronic today. So we stream all our axes already onto all the electronic platforms, so onto Bloomberg, Tradeweb, Market Access, Confusion, and so on. And then you've got everything else, which is not electronic at all. So there is no platform that offers axes for IRS and asset swaps and all of this. So a lot of the business where we use ipushpull is for enhancing our voice business. So it's providing clients with a much better experience for voice business. So it's what we call high touch, basically. So it's a digital high touch business. So better quality flows for clients, but focusing mostly on we still use our salespeople basically in this workflow.
Right, that's brilliant. Thanks, Julian. John, can I bring you in again here, please? One here on security of data distribution and control. Given your experience, both Goldman's, BMLL, and with the Investment Association, that control of governance was obviously a very, very big hurdle for larger firms with legacy platforms. Are you still seeing this as a major hurdle for your members today? And if not, what's bringing about those changes?
I think comfort with the cloud is the primary thing that's changing people's perception on this. I believe that it's constantly been an issue. I mean, the biggest hurdle really is the sort of crown jewels each of these firms hold, which is their own trade data and how they have interacted with the market. The amalgamation of that with the actual market data, if you like, is the holy grail. Some people are trying to do that on premise, some people are trying to do it in the cloud, but it is becoming more normal, let's put it that way. Asset managers are, in my opinion, the most conservative trading type out there. And so they have been slower at this, but it's getting there.
Okay. Is Mark, have you got any insights to add to what John was just saying there?
I think the key thing is that the requirements of a smaller user in the marketplace are that they don't necessarily have time to, or the resource and staff an IT staff to deal with data feeds. They need a platform or a working solution that wraps around the data. And I think that the choice and availability of such solutions to the smaller user can be complemented by the ipushpull product, for example, the Excel add-in and the Symphony and bot solution as well. So I think it's about how you can access high quality data that was maybe in the realms of the big market data consume multi-million pound contracts. How do you get the data for the smaller firm? He's actually more focused on a specific market or product. And I think this is an enabling technology to do that, but it is complementary. And I think there's a lot of prospects and opportunities for the buy side with this technology, as there is for sell side in different types of areas.
Can I follow on that question to maybe
absolutely.
John and Julian? Like John, you mentioned that asset managers historically have been a bit slower to adopt new technology, and the question probably goes to both you and Julian. Is it? I mean, taking a step back, you would just kind of safely assume that perhaps that's because asset managers, because they are, they're the real money, they've got the flow. The banks will run around to provide whatever technology the asset manager demands. Is that one of the reasons why historically they haven't kind of made as much efforts to keep up with technology? Whereas on the sell side needs to be at the cutting edge all the time with every single different type of distribution and mechanism and connectivity, so that whatever customer asks for it, they can connect them up easily.
In short, yes. The buy side has relied on the sell side forever for information flow, etc. That is not an argument. I think it speaks volumes that the Investment Association, in its most recent cohort, adopted ipushpull. So that tells you from all the people who made that decision that ipushpull represents something they want to learn a lot more about and become more savvy with.
Yeah, on our side, I think it's probably a balance, right? So if you look at the market, if every asset managers were talking to each of their dealers and asking them to adopt their particular API, and if it was the same thing the other way around, you can imagine the number of connection and the huge amount of work that they would create. So having an abstraction layer in between that's the obvious solution, right? So something like ipushpull you can put in between. So we can push using whatever API we want into the cloud, and then our clients can start loading this data using either an API or Excel or whatever means they want. It's just making everybody's life easier, really.
Okay. Question I'm going to start off with you, Mark, if I can. We've talked about distribution of data, consumption of data, flexibility, ease, but how critical is the quality of that data and managing that in the first place? If you could give us some insight on that, that'd be great. I'd be interested to hear thoughts around that from other members of the panel as well.
Thanks, Clive. I think data quality is even now more critical in today's modern trading environment, especially when it can be the basis for AI type of processes and machine learning processes, which require almost perfect input to achieve anything meaningful. And also the cost of fixing trade breaks is becoming disproportionately higher. And whilst the number of trade breaks is actually decreasing, the cost of exceptions is becoming quite a common concern for businesses as they recognise high quality data can essentially minimise trade breaks occurring. I think you go back 10 years and the tolerance on quality could have been in double digits, but today it's zero tolerance of quality required. And we have basically, in terms of our firm, we have modified and enhanced our data management and data quality processes. We have ISO 9001, which is a quality management standard that really is a minimum requirement to be able to publish data with the highest quality at the most cost-effective price. So it does have a sort of price point, but the requirement for high quality data is absolutely essential. We've heard a lot of talk about technology, new and legacy, but without the high quality data or the right data in the system, it's not meaningless, but it means that you get more trade breaks, you get more points of failure. So it's something that will prevail through whatever technologies arrive over the next 2 or 3 decades. You still need to be confident in the data set is the highest possible quality.
That's great. We've got not much time left, actually. We've managed to fill that a lot of time pretty well. We've had a few questions, or quite a few questions I haven't been able to get round to. I think, Matt, before I ask you to give us a sort of wrap up, what I'd love to do is go round the room. And I know John has to leave us fairly promptly at 4:30, so come to you first, John. And how do you see data as a service growing within your organisation, I suppose, within your members, given your role, over the next year or so?
Thank you, Clive. How is it going to grow? I think, there are a lot of firms now using it actively. I think there's an awful lot more exploring it at different levels of that. But I think everyone realizes that rather than, going back to what we were talking about earlier, rather than the build first and buy last option and the way that it is completely reversed, people are now prepared to look at how it will help them streamline, how it will lower costs, create a faster path to innovation, allow them to make more agile decision-making processes, creating a data-driven culture, lowering risk, and leading to better revenues. So once those dots are connected, even some of them, it will become more prevalent, without a shadow of a doubt.
That's great. Thanks very much for that, John. Patrick, can I put the same question to you, please? Over at Maystreet, how does data as a service grow over the next year or so?
Yeah, so I think, for each of the consumers of data as a service, it's interesting to think about what their objectives are as a business. Is it to reduce costs? Is it to reduce errors? Is it to make better investment decisions? So, the ways that it grows are definitely, different in the front, middle, and back office, right? And reflect the sophistication of the firm. So I think you'll see firms all kind of moving up the stack. So firms that are just looking at it are trying to do some of the simplest things, prevent errors, right? Make data more available at the time of the decision, whatever that decision may be. So incorporating the data into broader processes is always the trend, right? So, maybe you have one input today and in a few years you have 10 and, 100 sometime after that. So I think the trend that we'll see more than anything is using more data in more workflows for whatever those original business objectives are. And there are some really phenomenal opportunities over the scale of years of how do you get the right data at the right moment in the right format so that people can make automated better decisions, which is non-trivial problem.
Yeah. That's an interesting one. Julian, over to you. Same question. I suppose you'll be looking at people automating, executing against axes, and how you move that sort of thing forward. But over and above your use of ipushpull services to get your axes out to your clients at the moment, how do you think things will change for you over the next year or so?
Well, I think Patrick is spot on. It's really about getting the right data at the right time to the right client for us. So it's making all these data more relevant. We got loads of data. We distribute loads of data. We now have a really good way to distribute it and get it to the right place. So it really is about making sure we make this more and more relevant. That we basically send to clients what they want, basically. So rather than just inundating everybody with generic data, really make it relevant, make it to the point.
Okay. Last but not least, you, Mark, and then we'll hand it over to Matt to just give us a bit of a wrap up on the conversation that we've had today.
Sure. Well, as a traditional data vendor, having been used to providing bulk data feeds to many tier one banks, we come up with a phrase which is we use for many years, which is we only do what only we can do. And we're more concerned about curating the data set and understanding the complexity of the futures and options universe that we actually are active in. So that is why when we looked at our strategic plan, we wanted to attract more second and third tier clients. The route to market was either through partners or directly through technology. And that's the reason we're a classic buy from ipushpull to the extent that we are using their products for Excel add-in and Symphony app and bot to access the lower tier markets, or the tier 3 markets in particular. And so our hope over the next year or two at least is to increase our presence in that market and to essentially publish this factory of high quality data that is used and proven by tier 1s and some tier 2s already into the rest of the market. So we're looking for an active engagement with ipushpull from here on in.
That's great. Thanks very much indeed for that, Mark. Matt, we've had quite a bit of conversation about, what is data as a service? What are the economic benefits? What are the efficiency benefits? What are some of the difficulties in applying? Can you just give us some wise words just to round off the conversation a bit, and some final thoughts, please?
Yeah, sure. And just wary of time, so I'll kind of wrap this up quickly. COVID has transformed the landscape, for the majority of those that work in financial markets who are now working at home. There's no new norm anymore. There is no norm. There's only a future state. So that means working practices will change. Workflow needs to be more efficient. Data needs to be easy to access, as well as being secure and access controlled. As we move towards live data-driven workflows, people need to be able to seamlessly connect to data in any application in real time, and also at the right time and the right place, like we've just been talking about, and from any location. Now that people are not working in an office anymore, that needs to be easily accessible. So we're seeing data as a service being adopted across sales and trading, between sell side and buy side, across technology vendors, all of whom are providing a better, a more efficient experience for their clients. So moving away from manual processes, emails, spreadsheets, copy paste, not using expensive development projects to connect things yourself. Instead, look to incorporate data as a service into your digital transformation projects or as a new digital distribution channel. So on that note, I'll kind of round up. So thank you everybody for listening. Really appreciate it. I hope you learned something new today. Thank you to the panelists. John had to leave early, but thank you, Mark. Thank you, Patrick. Thank you, Julian. Appreciate your time, and thanks for hosting, Clive.
Thanks very much, Matt. Just a reminder to everybody, please go on to the ipushpull website to download the report. We'll give you a bit more information there, and also reach out to ipushpull if you've got any more questions around their data as a service offerings. Again, thanks very much. Reiterate Matt's thanks for everybody to attending, and also the panelists. Have a great rest of your afternoon.
Thank you.
Thanks, everyone. Bye.
Thanks. Bye.